All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. This ever search for meaning in the market and by everything in the market, it's never ending. It hasn't stopped for 100 years. It won't stop for another 100 years. And that is just the nature of the market. It's constantly looking for the next thing and trying to define what it means. And then it comes and it goes, and everyone's left. Okay, now what? And we see that here today. And just take a look here at 10 o'clock my time. This is 12 o'clock Eastern. You see S&P futures. They whip up, then they drop down, then they whip to a new high, and then they drop almost 50 points here. Okay, this is almost 50 points, and then they rally on back, and now they're just kind of chilling out. So what's going on? Well, they're searching for meaning, and the meaning here in the Fed and what Chairman Powell had to say today. And I'm going to come over here to the Street Insider feed just because this kind of shows, this kind of shows it. And you can see here, 5 minutes after he started talking, they come out with a base of basically what he said. And if you go through what he said, he did not say anything that the Fed hasn't said for the last week or they haven't said in the last month. There is nothing new here. Okay, highlighting the backdrop of a still tight labor market and the 11 rate hikes delivered so far that could still tighten financial conditions, the FOMC is proceeding carefully. I mean, filler words, financial conditions have tightened significantly in recent months. This is what we heard the Fed talking about over the last couple of weeks, saying, hey, the drop in bonds and the rise in rates has done some of their job for them. And so he just made that comment again. And he basically said the most recent measure of core PCE, right? We've talked about the three types of inflation. We had CPI, PPI, and then PCE. And the Fed's preferred measure is PCE. And so he talks about it. The core PCE showed a slowdown to the pace of 3.9 from 4.3, though still well ahead of their 2% target. So did not give the market anything new, anything different, here to digest. Yet we start to see the market start to see the market move. He said the Fed has slowed on rates to give policy time to work. Okay, they've already said that. Calls the economy resilient, says it may be that rate haven't been high long enough. Doesn't see fundamental shift in the way that rates are affecting the economy. Basically saying spending's been higher, household savings are higher, long-run potential growth doesn't change much. He's really not saying much. And all through this, he says evidence is not that policy is too tight. He says he's just saying stuff that we've heard before. There's no new nuggets, nothing. Yet the market is just pushing, trying to find something to pin off of in a sea of everything that's going on with Russia, Ukraine, Iran, China, the U.S. House of Representatives, Israel, Hamas, Hezbollah, Saudi Arabia, oil pricing. There are so many issues out there in this market that it's not, it is significant. The number of issues are significantly greater than normal. Okay, normally there are quite a few issues, but right now it is much more than normal. And okay, here he goes. He keeps talking. Finally, he finishes up. And even that he finishes becomes news. And that's very unusual. If you ever follow this message feed or any message feed, you typically don't see them say when somebody finishes speaking. And here today with Powell, they did. They said, finishing speaking. Shortly after that, drones said to attack a U.S. military base in southern Syria. So we got that going on. I mean, it is... it's gnarly out there in terms of the news and everything that is going on. And overall, if we just back out S&P futures here over the course of the last week, even over the course of the last month, the market dropped on some positive economic data and on the jobs report, and then popped after the jobs report. But overall, since what is this date here? Sorry, I don't have it on here. 1, 2, 3, 4, 5 weeks almost. The market has pretty much gone nowhere here in about 5 weeks. And with all of this happening, that is very interesting. The Bulls can find some victories in it. The Bears can find some victories in it. What we have seen over time is that when we've had these kind of chaos periods of the market, these choppy periods in the market, because we've had a lot of them. This is not new. I mean, the last one was here in April and May. When we've gone into these, typically the market has resolved itself higher. But not in every case, and not always. But it is something where we could still see the market drift on lower. But overall, it is very clear that the market itself is heading into a little bit of a consolidation zone, and it's going to take some sort of new news to break that. The last thing I wanted to show here are the Fed funds futures. And let's just put in CME Watch, Fed Watch tool. That'll bring it up better. There we go. And this is basically showing what the market is pricing in terms of a rate hike or rate decline. And you can see that right now, the market yesterday, 93% priced in that the rates were going to stay the same. After Powell here today, 99%. So basically the market is almost 100% sure that the Fed is going to keep rates stable here at this next meeting. And if we go out to December, you can see that the market went from 60% chance they keep them the same up to almost 70% chance that they keep them the same. So the market is basically saying, all right, the Fed is signaling to us that they are not changing rates here for the rest of the year. And it is clearly what the Fed has been trying to signal. Now, bonds are still tightening. We still see, the 20-year bonds pushing on down. They're breaking these October lows, which is a dangerous area, very dangerous area for callers or for buyers and sellers. You can get into some free fall, or you can get into some nasty whipsaw in these areas. And, so we probably have a lot more to come, here in this bond area. Okay. All right. Last thing here, and I wasn't going to talk about it, but let's just do it real quick here. CRM. I have CRM here for the challenge. And, the stock's up $5.40. It was down $5 yesterday. It's been a wild ride. I think we're up a couple pennies on it or something. But when we look at the parameters for the trade, let me just come in here to Trader Minute and pull them up. If we come and look at the parameters, we can see that the auto exit red date is the 19th. Okay, so here today. The stock exit level 204.62, profit level 218. So what does this mean? Well, we barely held the stop, yesterday at the close. This morning it held it, but we are in the auto exit red. CRM is able to hold on here. This is a very good sign. This is a very positive piece of price action. Hit the upper Bollinger Band, weaken a bit, and then snap on back, especially when the market has been tracking lower. And so looking for this breakout above 210, and we'll most likely hold this today and try to give it some time to work. As far as other trades and things out there, I'm going through everything. I went through it a little bit during Powell's speech, but we'll rerun the algorithm scans, see what's on there, and if there is something, we'll jump on and make that trade. Thanks for hopping on. Have yourselves a fantastic day, and we will talk to you later.